Chinese gold trading activity explodes. This is just overall trading volume on the Shanghai Futures Exchange. And you can see, again, going back almost 10 years, we have a massive spike happening in early 2024. So this is 4 times as high, perhaps even 5 times as high as the long run average. That is a massive, massive increase. Hey, Gold Silver family, Alan Hibbert here with another video. And today I want to talk about what's happening with gold in China. There's a lot of buying. And I want to talk about how that's going to affect the geopolitical situation with the flow of gold moving from the west to the east. So let's get into it. The first thing that caught my eye recently was this article from Zero Hedge. Chinese have grabbed gold by the throat as capital flight accelerates. Chinese speculators have really grabbed gold by the throat. That's how John Reed, chief market strategist at the World Gold Council, described the scramble in the communist nation among investors looking to move money anywhere but in the yuan or Chinese assets. As evidenced by soaring Chinese FX outflows, the recent surges in alternate currencies such as Bitcoin and gold strongly suggest where the Chinese are seeking safety. So for today, I want to focus on gold, and there are a few charts from this article I want to share with you. But first, as Bloomberg reports, juicing the rally in gold is unrelenting Chinese demand as, listen to this, retail shoppers, fund investors, futures traders, and even the central bank look to bullion as a store of value in uncertain times. So the point here is that every size investor in China is looking to gold, including the central bank itself. And yes, China and India have typically vied over the title of the world's biggest buyer, but that shifted last year as Chinese consumption of jewelry, bars, and coins swelled to record levels. So now China is the #1 importer of gold in the world. And you can see here that China, in the black line, surpassed India, the blue line, the last 2 years. So China is leading the world in gold purchases. Another chart from the same article, Chinese funds supercharge gold's rally. And what we're looking at here is the long open interest on the Shanghai Futures Exchange held by futures firms. Okay, so you can see recently in the early months of 2024, over 300,000 contracts of long open interest. This isn't just open interest where sometimes it's long, sometimes it's short. This is long only open interest. So these are futures firms that are bullish on the price of gold. They think the price is going to go up, and the interest in that position is the highest it's been in this entire data set going back about 10 years. So we can see massive interest from firms. Another chart from the same article, Chinese gold trading activity explodes. This is just overall trading volume on the Shanghai Futures Exchange. And you can see, again, going back almost 10 years, we have a massive spike happening in early 2024. Compared to the average from the last 4 years or so, it's under 500,000. And now we're up over 2 million. So this is 4 times as high, perhaps even 5 times as high as the long run average. That is a massive, massive increase. So a lot of volume here on the exchange. Another chart here, Chinese gold imports. This is monthly data going back to early 2017. And you can see that there was a tiny dip in Chinese gold imports in the COVID era for about 2 years here, but then demand has returned and even broken out to record high levels. So China is importing a record high amount of gold. And as we've mentioned a couple times, it is the world's #1 importer of gold, and it's setting records. So this is a huge shift. Something else to be aware of.
Hi, I just wanted to take a moment and thank you for subscribing and mention that if you'd like to help our channel, please consider my company, GoldSilver.com, the next time you buy precious metals. We're one of the most trusted names in the industry. Our prices are sharp, delivery is fast, and we have an insiders program where you find out exactly what I'm doing with my own investments. Thanks for making GoldSilver.com your dealer, and now back to the video.
Something else to be aware of. People often seem to forget how much gold China produces when they talk about how much it imports. So yes, while China is the #1 importer of gold, it's also the #1 producer. You can see here, last year, China produced about 370 tons of gold. That's higher than any other country. So this is very interesting because when a country is the number one producer of something, it's often the number one exporter, or certainly a very high exporter. So if China was the number one producer of gold, you might expect that it exports that gold to the rest of the world, but that's not the case. China produces the most and it imports the most. So it's basically functioning like a vacuum cleaner, sucking up all the gold all over the world. This is huge. And so the net result here, we can see on this chart, East versus West world gold reserves. So this isn't just China versus the United States. This is many countries here split into East and West. But you can see going back to 1950, shortly after the end of World War II, the blue line was almost the entire height of the total gold reserves in the world. Okay, so almost all the gold in the world was in Western countries, and very little of the gold was in Eastern countries. Over the next 70 years or so, the balance has shifted. The blue line has, on average, gone down. The net result is for the West to lose some of its gold and for the East to gain a significant amount of gold. If you look at the height of this red line at the beginning compared to the height of the red line now, it's probably 10 times as high. And of course, the blue line is shorter. So you can see that the overall shift here is that the gold in the world is moving from the West to the East. And if you remember the golden rule, he who has the gold makes the rules. Okay, so the United States was basically making the rules in the world for 100 years or so, and that time may be coming to a close. We will see. Closely linked with that, closely linked with making the rules in the world, is having global reserve currency status, which the United States has enjoyed since approximately 1920, shortly after World War I. However, global reserve status only lasts about 100 years. You can see that it has shifted since 1450 from one country to the next about every 100 years. For the United States, it's been 100, 104 years now. Its time could be coming to a close. Will the next country be China, Russia, some other country? We don't know. But it would be kind of an anomaly if the global reserve status for the United States lasted significantly longer. That would make it an anomaly. So we have to ask ourselves, what could be causing this shift in power? Traditionally, it's war, it's peace treaties that establish new reserve currencies, it's large macro events that cause an imbalance of power and a new restoration of peace. So what could it be? Let's look at a few examples. Eric Young here says, this is a financial nuclear bomb. And he's talking here about the US is preparing sanctions against Chinese banks for supporting Russia. Let's zoom in on that tweet. The restrictive measures will be designed to cut off some Chinese banks from the global financial system in order to limit Beijing's support of the Russian military industry, the Wall Street Journal reports. Depriving Chinese banks of access to the dollar is named as an extreme measure, as such sanctions often lead to the bankruptcy of credit organizations, the Wall Street Journal notes. U.S. officials say the sanctions are being considered in case diplomatic attempts fail to convince China to limit exports of dual-use and military goods to Russia. Okay, so what we have here is China interested in supporting Russia, and the U.S. is not interested in China doing that. So this is the global chess game unfolding before us, and regardless of which side you're on, regardless of whether or not you approve of any country's actions, I think we can all agree that things are delicate. Things are delicate right now. Another tweet here from Crossb Capital. Whatever the compelling moral case, okay, interesting, but yes, whatever the compelling moral case, the economic impact of April 20th's decision could match that of August 15th, 1971, when Nixon took us off gold. So I think viewers of this channel are familiar of how important this decision was in 1971 when Nixon severed the tie to gold. And Crossb Capital here is claiming that perhaps the decision from April 20th could prove to be just as important. So what was that decision? Well, the U.S. House of Representatives approved a bill allowing the transfer of frozen Russian assets to Ukraine. Ukraine could receive almost $8 billion under this procedure. Now the bill must be approved by the U.S. Senate. So again, it's not official, has to be approved by the Senate. However, if this happens, basically that amounts to Russian assets being frozen and given to Ukraine. So again, whatever the compelling moral case, right? We're not here to judge the morality of this and say that it's good or bad or right or wrong. It could just be something that happens. And of course, every action has a reaction. So I would not expect Russia to react favorably to this. To me, this doesn't seem like the type of action that leads to peace in the world. It's the type of action that leads to war and conflict. That's just my opinion. Now, I'm eternally hopeful that the world can achieve a state of peace. This isn't how I would expect to get there, but I've been wrong about things before. So hopefully this will get us to peace. One thing I want to mention is a tweet from Luke Groman. 27 years ago, Zbig Brzezinski warned the most dangerous scenario could be a grand coalition of China, Russia, and perhaps Iran. And I'll come back to this in just a second, but in case anyone doesn't know who Zbig Brzezinski is, he was a Polish-American diplomat and political science. He served as a counselor to President Lyndon Johnson for a couple years, and he was President Jimmy Carter's national security advisor in the late 70s. Okay, so he knows a thing or two about geopolitics. So yeah, potentially the most dangerous scenario would be a grand coalition of China, Russia, and perhaps Iran, an anti-hegemonic coalition united not by ideology, but by complementary grievances. Complementary grievances. So China, Russia, and Iran, unhappy with sanctions from the United States, unhappy that they don't have access to the global reserve currency, the US dollar, unhappy that they don't have access to financial markets. And perhaps that could be something that unites them against the United States. So Brzezinski said that back in 1997 in the Grand Chessboard. So we will see what happens. Obviously, I don't know. I'm very optimistic that we can reach a state of peace. And yeah, if the price of gold goes up, I hope it's not because the world falls apart. Let me just say that. So yes, it's nice to get rich, but not at the cost of millions of human lives. And I do want to end on a happy note because I'm generally a very optimistic guy. I tend to look on the bright side, and I hope you guys can do that too. And I want to remind you that even all the wealth in the world means nothing if you don't have anyone to share it with. So this right here, it's a picture of me and Mike Maloney. We've worked together for over 5 years, and just last week we had a chance to meet together in person for the very first time. So it was a very special moment for me. That was up on his ranch in Puerto Rico, and unfortunately it was just one day. So hopefully I can make it back for some more time very soon. So thank you guys for watching. Stay safe out there, and I'll see you soon.